5 expert tips to increase the profit of your business, actually using funding to do so. Pretty cool. And that's exactly what we're about to go through right now in this training. Look, the economy is shifting, and this may be affecting your bottom line. And interestingly enough, you can use funding to be able to radically increase your profit margins and make more in your business while getting the money you need to grow your business at the same time. And that's exactly what I'm about to reveal. Right now, I'm going to give you the 5 different ways that you can actually increase the profits of your business by using business credit lines and loans to do it. We got a lot to cover, so let's dive in. Tip number 1, buy more. Yeah, that's right. I said buy more. I know you said, Ty, look, this is a video on increasing my profits. How do I increase my profit when I buy more? Well, the reality is when you buy more, you buy in bulk. And when you buy in bulk, you get discounts. So let me give you an example. Our software is one of the biggest expenses that we have. But by coming in and paying annually for our software in one shot instead of monthly, we oftentimes get 30 to 60% discounts on that software. The bottom line is when we pay more, when we make a bigger order, then we typically get substantial discounts which go right to our bottom line. Now, business credit and lending can help you get there. By getting loans, by getting credit lines, by getting business credit cards, you have the money that you actually need to be able to buy things in bulk. Maybe it be tools, maybe it be inventory, maybe it's things like software. Whatever your biggest expenses are, you can typically reduce those dramatically by just paying in one lump sum instead of paying over time or increasing the order amount. Maybe you're in an industry where if you buy in bulk and you buy 50 of the things versus one of the things, you get a discount. Well, business credit, business lending helps you have the opportunity to do so you're able to buy more, get massive discounts, and increase your bottom line. Now, my second tip is pay less. So we want to be able to buy more, but we also want to pay less for that. And there's a couple ways this could work. First of all, when you do buy in bulk, you typically get discounts that allow you to pay less, right? It saves you a lot of money because you're actually buying in bulk and paying less to do so. But there's also financing out there like credit line hybrid where you can actually get rates as low as 0% for up to 18 months. So now if you start combining these strategies together, you're able to go out and buy more, get discounts, and then put it on 0% financing that you're then able to deploy whatever it is those things you're buying, get your return, and pay it off before any interest accrues. So it's not just enough for us to buy more, we also want to pay less, and both of these go right to our bottom line. Which brings me to tip number 3, monitor your spending. Look, there are solutions out there like Divvy or even Ramp that can help you build business credit while monitoring your expenses. You can even have separate cards issued to team members, and you can monitor not only your expenses, but their expenses as well. So now that we have an easy way to monitor expenses and build business credit at the same time, now we can also see where our biggest expenses are, and then guess what we do? We repeat steps 1 and 2, right? Tips 1 and 2, we repeat. Now we buy more, we pay less, and we reduce those expenses dramatically. Which brings me to tip number 4, stop using your debit card. Please, I beg of you. First of all, there's a tremendous amount of fraud going on right now. And if you use your debit card and you get hit and they deduct money out of your bank account, look, it could take weeks or many, many months to be able to recoup that money. So just for overall fraud protection, you want to stop using a debit card altogether. But in using credit cards to be able to fund your business, especially business credit cards that don't require guarantees and credit checks, there's a lot of benefits for you because these credit cards also have rewards points. And it's funny because I was just actually at a dinner with several of my friends, and they were having a competition of who actually is saving more money using their rewards points. And the reason for this is we're all in the middle of Spain, and literally all of them got there by using rewards points to pay for their hotel and for their flights. So look, rewards points do so many things. You could get 2, 3, 4, 5 points on groceries, on fuel, on office supplies, on your everyday spending. You get points and cash back, things like hotels and even flights. So what you've got to do is once you figure out where you're spending your money, you can get credit cards that actually give you more points in those areas, and just the normal spending that you're doing gets you tremendous amounts of cash back and rewards points that can then be used to purchase all the other things that you need to grow your business. This means your travel can be free. This means you're getting significant discounts on fuel, on office supplies, on everything you're buying every day just by spending money like you normally would, but by switching from a debit card and moving to a credit card instead. Now, the the other benefit of this is that because you're using credit cards, if you've chosen ones that report to the business credit reporting agencies, now other lenders and credit issuers see you're spending this money. So it's like a bonus of this tip, because now you become more lendable because other lenders and credit issuers see you're spending all this money, and that makes you a better target for them to want to give money to you as well. And that brings me to tip number 5. In times of peace, prepare for war. And this is exactly how it works in the banking industry. Look, when times are bad, banks tighten up. It's harder to get approved. Approval amounts go down. Rates are higher. But when times are good, it's easier to get money. The money is flowing. Approvals happen faster. They are easier. You're getting better rates, better terms, more money. So what you want to do is when times are good, you want to stock up for financing then before times get bad. This way, you're prepared for times to get bad because you have all these credit lines, loans, and credit cards available for you, but you've also got all of that on the best terms before things got bad. So make sure you are prepared. The worst thing you could do is be in a bad economy and your business doing bad and then try to get money. You may be able to do it, but you're gonna get less money at significantly worse terms than if you got it when things are good. So make sure when times are good that you're stocking up, especially on the revolving credit you need to carry you through the bad times. And bonus tip number 6, talk to an expert. By just talking to one of our account executives, we'll talk through what's getting you denied right now and help you improve your fundability, give you tips and tactics to build your business credit, and tap into lending as well. We'll tell you all the financing you can get right now, and it all happens by clicking the link in the description of this training to access our 100% free finance assessment. You can also get it at creditsuite.com/consult. Did you get value from this training? If so, make sure you like and subscribe to keep your eye out for our next training, where we talk about even more cool ways to get the money you need to start and grow your business.